Let's be real. When you buy a car, you either drain your savings or you sign up for years of payments. Either way, your money is gone. And the bank, yeah, they're the only ones laughing. And here's the kicker. That shiny new car you just bought, yep, it loses value the second you drive it off the lot. What if buying a car could actually help you build wealth instead of just draining it? My name's Chris. I'm gonna show you how to finance your car using the infinite banking concepts where you're the one in control. Imagine paying yourself back with interest like you do the bank, except every car you buy, you get wealthier because you are the bank. In this video, I'm gonna break it down step by step on how you could use the infinite banking concepts by changing one thing and adding one step, and you will be the bank for your next car. So here's the secret. You do not need to borrow money from a bank for your next car. Matter of fact, let's talk about the different ways you could buy a car. I mean, you could save up the money in a bank account, right? And pay cash for a car. You could go to a car dealership and you could lease a car and make payments monthly and then just give the car back. You could finance the car through the bank, which we're going to talk about. And, well, I mean, hopefully nobody's listening, but you could steal the car. But don't do that. What I want to do is I want to show you a different way, and I want to show you a one-of-a-kind software that Craig and I have built. A software that will completely revolutionize the infinite banking world. And that's what you're going to see today. But we're going to focus around cars because I want you to know how to get all the money back for every car you buy, drive, and own. I'm going to give you an example. Back almost a decade ago, my wife needed a new car. So we were in the dealership, like many of you have been, and we're negotiating the car. We're sitting there, we had the car we wanted, and we're sitting there with the salesperson negotiating what? The monthly payment. That's right. So we're going back and forth, and we were talking about, well, we could pay cash for the car because we had the cash to do it, or we could finance the car, and they were really pushing the financing because they said rates were really favorable. So we're going back and forth, and they kept pushing the whole negotiated rate over, and I'm like, nah, that's too much. I'd slide it back. He'd run back to the finance manager, come back with a new number, slide it over. I'd say, no, that's still too much. Back and forth, back and forth. Finally, he slides it over, and there was a number. I look at my wife and she nods. I look at the salesperson. I'm like, yep, all right, let's do it. So I slide the paper over. That entire time, all we were doing is negotiating the monthly payment because it needed to fit my budget. Now, the salesperson was in for a real surprise, and that's where you're going to throw this magic into the mix as well. You see, I had no intentions of financing the car with their bank, but I did use their software to tell me how much the best monthly payment I could get if I had gone to somebody else's bank. So what the salesperson does is he says, perfect, let me get all the paperwork from the finance manager. I said, no, that won't be necessary. We're going to finance this car with our own private banking system. Ha, yeah, so you all thought I was going to finance the car with them. All I needed them for at that time was I needed their tools to figure out the best monthly payment, and they did all the work for me. That's what this software that Craig and I built does for you. Takes all the guesswork away. Like I said, it's state-of-the-art, it's revolutionary, and it's a one-of-a-kind. So let's do this. Why don't we just show you how the Vault, the software, can actually help you buy your next car, or like me, maybe you buy your wife's next car or your kid's next car. Craig, can you take over and show everybody how the Vault software works?
Yes, I'd be happy to. And in the context of what we're going to show, instead of showing your specific situation, we've got a guy named Bucky Doe, and they have a family banking system, and his wife Beverly needs a car. So they have saved up $30,000. They have that just sitting in the bank, and they also save on a regular basis about $500 a month. However, Bucky's not doing traditionally what most people do, which is to take that cash out of the bank and go buy the car and then just make payments to the bank, just like what you talked about, Chris. But what's the first step they need to do? This is all what we teach all the time. What do they need to do as step number one? They need to change where that money goes first. And so what Bucky Doe and his family had done is they put together a specially designed and engineered dividend paying a whole life policy from a mutual company. He took that $30,000 and dropped it into his own banking system. And every month, instead of that $500 he was putting into his savings account, that also went into his own banking system. So here, we're not going to spend a lot of time on this today, but this is essentially what his banking system looks like. He puts in premiums every year and every month, and he's able to get cash value growth. So you see this 4,802, this 5887, 6195. That growth is going to happen while Bucky Doe and his family are buying the car. So while they leverage money from their own banking system, this is going to continue to grow and grow.
And Craig,
But
one
let's
of the
get in.
things that's unique about what you just said is we're not telling them how much they need to save. They're telling us how much they wish to save, and we're just telling them to change where that money goes first. Did I hear you correct?
Absolutely, yeah. So we're just changing where the money went before they went and purchased that car. Now, the real question is, what does it look like for Bucky and Beverly to buy that car? So let's jump into some planning here. Within the vault, Chris, that you've shared with our audience today is, we've got different aspects of the vault, and right now we're in what's called the loan officer. And this is where you're going to plan your policy loans, plan your personal loans. So let's just walk through that example. Beverly's car that they want to buy will run them about $25,000. So that's what they'll take out of their own banking system. Now, those nasty insurance companies, they charge interest, Chris. 5.5%, what Bucky and his family has to pay on that $25,000. A lot of people get stuck on this, but let's see how that really works out. So we're going to structure this loan where it's for Beverly's car loan, and we're going to structure that over 60 months. What the software is going to tell us is that we have payments back to our own banking system of $477.53. Now, all of this is based on a 5.5% interest rate. However, if we're paying our own banking system back, our net or effective interest rate that we're actually paying is 2.71% because we paid that back to our banking system, not someone else's.
And I think that's one of
So
the most important things, Craig, is, when you make a payment to somebody else's bank, let's say for somebody else, like Bank of America, Ally, the rate was 5.5%. That's how much you would have paid in interest over the full term of the loan. But here, because it's your private banking system, even though the insurance company is paying you 5.5%, if you repaid that at the same amount you would have paid somebody else's bank at roughly 5.5 over 60 months, you'd pay $477.53 a month. But now you're telling me that the effective APR, the amount you actually paid to the insurance company, was only 2.71% interest?
That is correct. And the loans from the insurance company are really one of the most beneficial I've ever found personally because of the way they're structured. But yeah, I'll be happy to pay 2.71 while I have uninterrupted compounding growth inside of my own banking system.
Yeah, and I think a lot of the folks watching this video would also be okay paying 2.71, seeing as though car loans right now are like 8 to 8.5%.
Absolutely. But this isn't where we stop because, Chris, when you went to buy your car, just like when Bucky and Beverly go buy their car, you sat down with financing folks at the dealership, right? And they structured your payment, they structured the interest rate.
Yeah, they did all
So,
that for me. That's what that back and forth thing was.
yeah, so if we're going to be honest bankers, shouldn't we pay our system back the same amount we would have paid the dealership?
Oh, that's what I would think.
So let's go over what we call the personal loan planning, where we've now got this $25,000 loan from our own banking system. However, we're now going to structure Beverly Doe as the borrower, and we're going to put the interest rate that she's paying at 8.5% because that's what the dealership would have charged us. Over 60 months, that means our monthly payment is now $593.75. So all we're doing is we're just being honest bankers and saying whatever we would have been charged and paid to the financing company, whether it's a bank or whether it's a dealership, we're simply going to pay that back to our own system. Now, here's the fun part about this. Because we used our own banking system, we actually made, in just interest arbitrage, we made $7,231.80 just by taking a loan from our own banking system. This is money that otherwise would have gone to the dealership, would have gone to the bank. So now, Chris, you shared with our with our audience different ways to buy a car, and I think this is the most beneficial. Of course, the cheapest is to steal it, as you joked around, but of course you're going to have consequences with that. But if you're looking to buy a car and you want to get all the money back for everything for the cars you own and drive, then this is the optimal way to do it, because I'll take that profit over, giving that to the bank any day.
Well, I think that's the one thing a lot of people don't realize is when you become your own bank, when you take back control of your money, you are the one who's receiving the interest. Okay, not their bank, your bank. And when you're receiving the interest and you're being an honest banker, paying yourself the same amount you would have paid somebody else's bank, like I mentioned earlier, you profit. So you made $7,231.80. You made a 3% spread. Okay, that's how banks make money. So you're literally taking back the banking functions in your life. And the software did that in, I don't know, what'd that take? A couple minutes and us kind of explaining that. But if somebody was sitting down trying to calculate what they would want their private banking system to look like when they're financing their car, they could dial in any number they wanted. They're in control because thou with the gold makes the rules, and that's what you just showed. But the other thing I think you left out here, Craig, is in doing this, at the end of that 60 months, the 5-year period, did you not pay yourself back every penny for that car? And then you made an additional $7,231. So you got the car, which is what you wanted or what your wife wanted, in my example, plus you got all the money back for the car and you made $7,231.80. Is that how I'm hearing this?
That's right. And Chris, the other piece of this is, how do we help people execute on this? So there's a few things. If I scroll down the page, we'll be able to see the actual plan of every month what we're paying and how much of that is personal interest versus the cumulative interest we paid. So we're just showing more or less the table or the schedule of how to pay that car back. But in addition to that, if you really want to get technical with this, just like you would get from a bank, aren't you going to get a note? So let's create a note for ourselves, and maybe at some point Beverly and Bucky are going to loan money to their daughter Minnie Doe for her first car. And so Minnie Doe will have a promissory note from the family bank that specifies the principal, the amount she's borrowing. So there's some example promissory notes in here. Now, we always recommend you take that to your own legal department and have them take a look at it. But this is really the first step in executing the loan, is let's get a promissory note out there. And then also let's map out how to pay this policy loan back. So in our policy loan management, we'll see down here we have our car loan for 25,000. And what I can do every month is I can just come in and make my payments. So hit my payment and you'll see that our balance continues to go down. Now here's the fun part about our own banking system, Chris. As we pay our banking system back, we're going to have more cash value available to use again. So for every payment that I make, I'm going to see my available cash value in my own banking system increase. I can use that for other major purchases. I can use that for investments and opportunities. I can use that for emergency funds. Really, the ideas are limitless there.
I think that's a key thing to mention. So folks, I want you all to think about that. Imagine if every payment you made on your car. So right now, you know how much you're making in a car payment. So imagine every one of those payments went back into an account, dollar for dollar, that you owned and controlled. So if you had an emergency come up, now all that money's back in the account instead of in, whatever finance company you got a loan from to buy your car. They're getting all the money. But you're changing the role in being your own banker. You're now getting that money. And that's what he's showing you, is every car payment you make goes back into your account, which then shows up as soon as your check clears. That's one of the most amazing things that I think a lot of people miss, Craig.
Absolutely. So that's the process we wanted to share with you today, is just how to take the policy loan, how to structure being an honest banker with the policy and paying it back the same amount you would a financing company. And then really just giving you the guidance on how to pay that back, how to track it, how to keep track of the cash value. So Chris, Anything to say in closing?
I think this speaks for itself. It makes it very easy, allows people to be in control of their car purchases or anything they want to buy. And like I said it earlier, and like Craig mentioned, you now have a way to get all the money back for every single car you ever buy, drive, and own. Plus, you get to make some money on those cars, don't you? So buying cars is no longer a way to lose money, it's a way to build wealth, which I know is very much different than the way most people are doing it today. That's how the infinite banking concept changes the game on cars. Instead of throwing the money away on payments, you're throwing the money into your own private banking system. Hey, buying a car doesn't always have to be a loss. I mean, it could be your first step into building wealth. Think about it. You could drive your dream car, get all the money back for that car, and be in control of your money. If that sounds good and you want to take the next step, then check this video out right here. The Secrets of the Wealthy, showing you how the wealthiest families throughout history have used this. By the way, thank you all for being here. I really appreciate each and every single one of you. This is the next step to generational financial freedom. See you on the next one.